Hello, everyone. Good afternoon, and welcome to ProStar's Investor Call. My name is Marvin Lopez, Director of Client Success at PointMan by ProStar. Today, we're excited to share our progress over the past few months, highlighting key milestones, strategic developments, and our continued commitment to creating cutting-edge solutions for the utility and construction industries. I'm pleased to be joined by our leadership team, who will be providing insights into our performance and vision. On the call, we have Paige Tucker, our Chief Executive Officer, Pat Clawson, a valued member of our Board of Directors, Jonathan Richards, a Chief Financial Officer, and Suchy, our Chief Technology Officer. Together, they'll cover a comprehensive overview of ProStar's achievements, financial performance, and the exciting path forward. We value your time and engagement, and we encourage questions. Please use the Q&A feature at the end of the presentation. We'll be addressing the questions towards the end of the session. Without further ado, I'd like to hand it over to CEO Paige Tucker to begin today's presentation. Thank you.
Marvin, thank you very much. And for everyone joining the meeting, thank you very much for your time and consideration. A couple of announcements I want to make in regard to some policy changes that we're going to make. One in regard to our investor updates. What we're going to do starting in Q1 is we are going to press release when we will be announcing the release of our quarterly reports, followed by the investor update. Jonathan, our CFO, feels that it's appropriate amount of time to get things done within about 40 days. So 30 days after the quarter changes, I'll check in with him to see how he's coming along. And if he feels that he can get the reporting out within about 40 to 45 days, then we'll go ahead and announce when the reports will be out. We'll press release it. And on the day that the reports are published, on that same day at the close of market, which would be 4:30 p.m. Eastern, 2:30 Mountain, we will hold our investor meeting, and we'll do that moving forward for each quarter. In addition to that, another policy change we're going to make is based on our press releases. Historically, what we do is we ask for the client's permission, we write a press release, we send it over to their marketing team for approval. The challenge we have, especially for a lot of these larger, major multinational companies, is it can either take several weeks, if not months, to get approval. We also find that sometimes we get pushback from them where they don't want to do a press release. They've told us that they have hundreds of smaller companies that would like to do press release and leverage their names. And so they simply do not do press releases with smaller companies. And they don't mind if you do a press release and don't mention their name, and we'll just describe basically, for example, if it's a multinational Fortune 500 integrated oil and gas company, we'll just mention that and the description, but we won't mention who the company is. The reason we do that is we want to get press releases out. Our investors community likes to see, obviously, press releases, and we're making progress. So that's one of the policy changes we're going to make, is that we're not going to be mentioning names. Without any further ado, let's go ahead and start our investor update meeting. Jonathan, our CFO, will start and go over financial results.
All right, thank you, Paige. Good afternoon, everyone. My name is Jonathan Richards. I'm the CFO of ProStar. I've been with ProStar Holdings and ProStar Geo Corp for over 5 years now, in the position of CFO, as I mentioned, and also on the board of directors. I'm going to start by just giving a brief recap of some of the financial results. It'll be brief. Hopefully everyone's had a chance to read the financial statements. So I'm just going to touch on some of the key numbers that I think all of you care about. Firstly, I'll speak to the sales. For the 9 months to September 30, 2024, we had $806,000 in sales. Keep in mind, we do have to present our numbers in IFRS, which means this is not new sales, but this is the deferred revenue. So each sale that we have, we recognize it over the following 12 months typically. So this is the revenue for that for the 3-month period based on the deferred revenue and IFRS accounting. The $806,000 was up from $691,000 in September 30, so approximately a 15% increase. For the 3 months, we actually saw a slight drop in sales. We had 225,000 in 2023 compared to 197,000 in 2024. The reason for that project was for that drop was the timing of some projects ending with some of our larger clients, meaning that they didn't need the solution at that time. So that timing caused a small drop, but that was supplemented by new contracts and new clients as well, which are obviously increasing as you all know, the clients are growing. Operating expenses for the 9 months to September 30, 2024, we had $3 million. That had dropped from 4.85 million for the 9 months of 2023. As you are all aware, and as released in a press release, we've been focusing on cutting operational costs. That can really be illustrated in the 3-month numbers, where you see a drop from 1.8 million down to 830,000. Some of the areas we're focused on, which you can see in the financial statements, management fees have dropped down from 207,000 for the 3 months down to 43,000. Investor relations have dropped down from 200,000 to 43,000. Professional fees, they have dropped down from 303,000 for the 3 months ended September 30 down to 44,000 during the most recent 3-month period. And then travel as well has dropped down from 71,000 to 20,000. All of this has obviously been implemented by the management, and we're also trying to ensure that all these drops won't impact the focus on sales and the growth of clients and new sales. Finally, the balance sheet at September 30, we had a deficit of 746,000. This compares to a deficit of 621,000. Deferred revenue, that was up from 390,000 at year end up to 473,000. That illustrates the growth in clients and sales. Finally, just one thing I will note on the working capital deficit, subsequent to September 30, we did complete the financing, which was approximately $1.3 million US, which has cleaned up the deficit and left us with cash to operate as we move forwards. All right, over to you, Luis.
Awesome. Thanks, Jonathan. Hello, everyone. Suchy, the CTO here at ProStar. Garrett, if you want to hop to the next slide, we'll go over some quick product updates. I wanted to start off by highlighting the work we've been doing around hardware integration. So we added roughly 6 new devices to be supported within the PointMan platform in Q3. This did get us to, I guess, a ceremonial milestone, if you will. We've now got support for 50 hardware devices within the platform. Also of note is we've continued to see the behavior from our hardware partners, in that instead of requiring us to reach out to them about support for hardware, they're now reaching out to us early on in their design life cycles themselves. So instead of us, after the fact, after something's launched, building support once it's on the market, we've got into a cadence with many of the large manufacturers where prior to the device being put in the market during their development timeline, they're reaching out to us to sort of begin the integration work early on, because it's becoming, I think, clear to them that it's important to have PointMan support for their new hardware devices on the day of launch. We can go to the next slide. Outside of just the hardware, some other quick updates that we've made around our platform. First, we invested pretty heavily in Q3 into streamlining our customer onboarding process. As Jonathan mentioned, we've seen an uptick in a number of customers onboarding onto the platform, and we were starting to see some issues and some complexity arise with the volume that was taking place. And so we spent some time during the quarter to work through those workflows and sort of provide optimization and automation in places that made sense to keep the human cost down as much as we can, as well as streamline and make the process as easy as possible for our customers. Secondly, we really focused our feature development on the things that have been requested by our largest enterprise customers. I think the 2 big notable ones were the ability to provide SSO single sign-on integration within the Pointman platform. Namely, this allows large customers who use things like Microsoft Active Directory or Azure Active Directory or security products like Okta offers for identity, the ability to log in using their enterprise accounts rather than a Pointman specific account. Secondly, we continue to invest in support for CAD file formats. In particular, we launched the ability to export DGN files directly from the Pointman platform. What we heard over and over again from our customers was they were taking data out of Pointman, then using CAD software to then push that data into other downstream workflows and processes that they had. By adding this DGN support, we really simplify that process for them. So instead of having to take it into CAD software and then into their downstream workflow, they can now simply get that output that they're looking for directly from the Pointman platform itself. Secondly, with a quick look into 2025, we're going to expand that CAD support to some other file formats, namely DXF. And also begin work on an enterprise API, and we're on track to have the initial version of our Esri integration ready by the end of Q1 of next year. Next item here on the cost optimization side, as both Paige and Jonathan mentioned, we've been very focused on whatever we can do to manage costs as closely as we can. We were able to find another, say, $15,000 in yearly expenses we were able to pull out of the platform in Q3. And then lastly here, as I think I mentioned last time, we've done some work behind the scenes to really optimize our future growth when the time comes towards being able to use offshore Latin American resources within the engineering and product teams going forward. Thanks, everyone. With that, Pat, I'll hand it off to you for sales.
Thanks, Louis. Hey, everybody. Really great to talk to you today. We want to focus on a few things here that we've gotten requests from the investor community on. And part of that has to do with the growth opportunity from our existing customers. If you go to our first slide, we want to highlight, what that looks like from a couple different views. The first view, if we go to our next slide, is one of our larger customers, and that would be Kiewit. If we pull them to the side, you can tell we're in about 8 of their regions today with a growth opportunity into another 40. Their current estimated revenue for those 8 units is around $300,000 a year in subscriptions. The potential revenue for that total organization is around another $2.5 million. So one of the things we want to help people understand, which is different for us than many of the other SaaS solution providers, is we're not one and done in an enterprise. Most of our initial sales are just that. They're initial sales that represent a starting point with a large amount of growth opportunity. If you go to the next slide, we look at the next kind of 20 customers, and we give you a sense of their current license count, their current annual subscription rate. And then if we're able to migrate them just to 50 licenses in 2025, that represents an opportunity from around $206,000 in subscribed revenue to $970,000 just within that group alone. If you peel that apart, you'll notice that several of those guys have the ability to go well beyond 50. Several of them, like Chevron and Jacobs and Stake Center, get into the hundreds and hundreds of potential licenses. So what we're trying to do is not give you the forever growth number. We're just trying to give you the sense of what that 20, which had a starting point in 2024, represent in terms of growth in 2025 alone, very conservatively. If you go to our next slide, we try to put this into 2 graphical descriptions. The first one is going from license count of 176 to 950 within that small group alone. And that should take us from around 206 in reoccurring to 970K in reoccurring revenues. A couple of other things to think about as we go down this path is we have been focusing continuously on larger and larger accounts, and you're starting to hear the names like Chevron and Jacobs and Kiewit and Stake Center. So we're moving our average deal size from around 5,500 per year per customer into around 11,000. And part of that is a pricing exercise that Paige will talk to you about. Part of that is we're appealing to bigger customers as well. But all in all, I'd like to say that we're continuing to deliver what we said we would do. We are growing our customer base. We are adding a good solid number of net new customers in Q4 alone, and we're looking forward to a very strong 2025. Pass that along now to Paige.
Pat, thank you so much. I really appreciate it. You can go on to the next slide. So what Pat is talking about, and I don't want to overuse this term, but we've all heard about it, is land and expand. So a lot of these larger corporations, number one, they're very difficult to get into, and they are somewhat against any type of change. And if they're going to make a change, they have to see that it could make a significant amount of return on investment, because they know that they're going to have to invest a large amount of their time and resources into well-entrenched business practices and workflows that have probably been utilized within their organization for a decade, if not longer than that. So what they'll do is they'll start out with a small amount of our licenses. Generally, we even have to do a pilot project where there's no exposure to them. Then they'll put it on an actual working commercial project and test it. Once they test it and implement it, they also have to integrate it into various software systems. They have to integrate it into various equipment that they've invested and utilized. So it does take some time. Once they test it and see the value, then they'll start expanding it throughout the organization. Now, keep in mind, they would not invest this amount of time and energy and resources unless they planned on expanding it throughout the organization. I'll just use a couple examples. Right now, we finally are in discussions with Kiewit. They're actually having a corporate discussion today, because the business units that Pat mentioned we're in have been able to demonstrate significant return on investment. We've actually reduced utility strikes on several projects in several regions by well over 97%. In fact, it's close to 100%. So we're saving them tens of millions of dollars on these projects. It's finally worked its way up to corporate, where they want to take a look at it as a best practice. They're actually meeting at an annual corporate meeting where they discuss best practices today. So hopefully I know something over the next week or two if we're going to move forward what we call at the enterprise level. Chevron, same thing. We had to do field testing on a test in New Mexico. Marvin was out training them on a commercial product because they agreed to sign a contract and move forward. And they have told us if this works well on this project, then there's an opportunity to sell them several hundreds of licenses just in the United States. And Global's taken a look at this yet also. But as you can see in Pat's projections and forecast, we're only using an average of 50 because we think that's what we can do this year. But in time, it'll go up. But I'm going to start utilizing this land and expand. And I'm somehow going to try and incorporate it into our press releases as well, so that investors and potential investors realize the opportunity for increased revenue and how big it is with these larger, what we call marquee clients. Next. So see, these are some of the clients that I've discussed in the past that we've actually signed, and I'm going to refer to them as marquee clients. These are large multinational organizations. The majority of them have global operations, so they have footprint, not just in the United States and Canada, but throughout other countries in Asia, Latin America, Australia, and Europe. So they represent the most significant opportunity for us to accelerate our revenue within the current client base that we have. As Pat mentioned, just with the top 20 we have right now, not including Kiewit, is almost $1 million. So we're going to start focusing on moving those customers, taking care of them, obviously, so they buy more license and expand the amount of licenses they're using. But we're starting to focus on onboarding more of these marquee clients. And I think it's taken us years to get to the point where we have the credibility in the market, working with the other companies, some of them smaller, some of them mid-size, and then, of course, working with the equipment manufacturers to get the brand name recognition and the credibility that we can even be talking to these larger organizations. But you can see the onboarding of these larger marquee clients is starting to accelerate. These are marquee names that are recognized throughout the industry, not only in the United States, but around the world. So Garney is the largest water, sewer, construction company In the United States, one of the largest in the world, as you know about OTG, which is the On Transit Group in Toronto, PCL's largest construction company in Canada. We just signed Haskell, which is one of the largest construction companies with operations not in the United States, but throughout Latin America and Asia, as you can see. Walsh, I do believe, is the largest privately held construction company in the United States. And then Garrett, we have a few more. We just signed Chevron. So what I'll do when I announce in a press release that we signed a marquee client, I will do a description and what industry they're in, but I won't mention their name. But through casual conversation, if you want to contact me or call me, I will share with you who it is, and I'll always share who it is when we do the investor update. For example, we also just signed TRC. They're one of the top-ranked engineering firms in the United States. Jacobs, as you know, I call that our holy grail because what we're trying to do is replace engineering and surveying business practices that have been well entrenched in this industry for almost 30 years. Jacobs is the largest engineering surveying firm in the world. It's taken us a long time to get into the doors of Jacobs and be able to demonstrate the value to them and to get them to actually sign a contract. So obviously we hope that this project they're on goes well, which we fully expect it will, and then we'll be able to expand throughout Jacobs as well. We also just signed Atkins Realis, which is another large Canadian multinational construction company. So as Pat mentioned, we're starting to see a significant uptick in the amount of the marquee companies that we're starting to onboard. That number two, give us significant credibility throughout the industry, throughout the world, but maybe more importantly, provide the opportunities to significantly increase the amount of revenue that we can realize from these larger organizations by expanding the amount of point man licenses that they use. Next. Often I'm asked about where we are with the DOTs. So we've been in discussions, obviously, with several DOTs. The two that I consider what I call on deck. And when I say on deck, and I've said this before with the other companies that we've signed, meaning there's a high probability that we're going to sign them based on where we are in the sales cycle and discussions and due diligence that we're going through. For example, Pennsylvania has told their engineering companies that service them, which they call primes, that they recommend on the RFPs, which is request for proposal to do work for them, that they use point man. So they're starting at least the process of telling their service providers to start using point man, but we're hopeful that we can actually bring on Pennsylvania as a client similar to CDOT in 2025. Oklahoma has also expressed a sincere interest that they want to move forward. They've had several meetings with Colorado DOT. We've also done several on-site meetings with them, demonstrating our software. And right now we're going through a series of steps that I'll call security protocols that Lewis and his team is involved in to make sure that we meet all of their security requirements as a government agency, which we will do so with flying colors. That will not be an issue. So I think actually Oklahoma might be next, but that is one of the companies and DOTs as well that I feel pretty confident we can sign in 2025, and perhaps maybe with Oklahoma in the first quarter. In addition to that, I mentioned before that we also signed with the company called Carasoft. Carasoft is a government procurement agency in all 50 states that a large majority of all government agencies utilize for procurement, meaning you go through Carasoft as a vendor and you are approved. So it reduces the vetting process. It means you are a fully approved vendor to provide services to any government agency. That includes at the federal, state, and municipal level. And we are an approved vendor of Carasoft. So it makes that whole procurement process much easier and more seamless for us because of the fact that we're approved vendor with Carasoft. Next. Pricing. At the end of the second quarter, what we decided to do was increase our pricing. Another way, obviously, to drive increased revenue is simply increase the pricing of your products. Initially, we were selling Point Man for $4,950, and we decided that we would go ahead and do a 40% price increase, knowing that since we had a number of clients that we didn't think that it would hurt our ability to sell into the industry at that price point. And in fact, it hasn't. So we started selling at $6,950. Now, one thing that we did find is that the larger organizations that can certainly afford more than $6,950 to mitigate their risk and exposure, they always took the lowest price package that we offered. So it was $6,950. So to address that, what we did last month is we came out with another pricing package that is specifically targeted for the larger enterprise. That starts out at $19,950. Now, it's also a value add proposition. The $6,950 package comes with 4 Point Man licenses, and then it's $995 for each additional user. At the enterprise level, it comes with 10 user licenses, and then it's $995 for each additional license. But in addition to that, you can see on the PC screen here, there's also several features and functionality that are critical features that these larger companies need that the smaller to mid-sized companies don't need. So when we show them that for $19,950, they get 10 licenses, but they also get all these other features and functionality, then they purchase this package. And we haven't had any pushback on it. In fact, we've had several companies, even the remark is, that's peanuts. But that is what additionally is going to increase our pricing as well as our revenue. And we will continue doing this. In fact, what we're working on right now is another package that will start out at $39,950. Because the other thing that we're finding, and this is working, is that we can take the clients that we initially signed for $4,950, and to get them to buy more licenses, we present the enterprise package for $9,050, where they get 10 licenses as opposed to 4, and they're starting to move up to this package. So this has been very successful, and obviously it is also significantly increasing our average price per sale per customer. Next. The other thing that we've done, and I think for many of you, you probably saw it on the press release that we pushed out this morning, is that we have continued to closely monitor our operational expenditures and take a look at what we felt we could reduce that was providing limited return on investment in order to reduce our operational overhead. And throughout particularly the last 6 months and going into December, provided us with the ability to really look back and determine what we could either reduce or eliminate without impacting our ability to to sell and continue to market to customers, and obviously continue to provide world-class support. So anything we cut out would not impact our ability to sell or to support our customers. And the majority of it was found in R&D, because almost all of our R&D is completed. We have a fully mature product. I'm often asked, can we continue to do development because we're a software company? And the answer is yes, of course. In fact, Lewis showed you all the development that they completed this quarter, and they have a whole complete, very robust roadmap for the next quarter and the quarter after that on all of the enhancements and features that we're working on, most of them which are client-driven, where clients ask for this and that, because the majority of the heavy lifting has been completed. In addition to that, we took a look at investor relations. We were spending what I consider to be somewhat an exorbitant amount on investor relations that we felt we weren't getting much return on investment. So we did cut back on the majority of that. And then we were able to negotiate several long-term leases that expired at the end of this year. And as a result of that, we were able to realize over $1 million US, which is about 1.37 million if I do the conversion based on today, Canadian, depending on where you are. So these are significant savings. But In discussions, I always say, this isn't rocket science. If we can significantly reduce our overhead and we can keep it at this number, which is extremely low and manageable, and every single week and every single month, we continue to increase our revenue and we retain our customers, that means that each month we get closer to profitability. Next. So our targets for 2025 have narrowed them down and made them really simple. And these are super focused, all about driving revenue and attaining profitability. We just need to reach about 200 clients, which is lower than what we expected that we needed to get to. The reason that number is lower is for two reasons. Number one, the revenue that we're generating per deal is increasing. Number two, just within those 200 customers, we would have anywhere between 30 to 40 what we call marquee clients, which give us significant opportunity to upsell and cross-sell within those 40 customers and the marquee clients, as Pat mentioned, the Chevrons, the Kiewits, the Jacobs, the PCLs. We also want to realize 2 DOTs, a minimum of 2. And I think in our current mature sales pipeline, as I mentioned, the highest probability is Pennsylvania DOT as well as Oklahoma DOT, but we are in discussions with other DOTs as well. And then, of course, continue to focus on signing more major clients, the marquee clients. And then, as I mentioned, expansion within our own current major client base, but as well as the small to medium-sized companies. That's one of the things we didn't mention, is that those companies also have an opportunity to purchase a significant amount of more user licenses. In fact, I like to tell this story because I only know it'll increase. I walked back into Matthew's office yesterday and he had a couple checks on the desk, and where are these from? And he goes, these checks are just coming in from customers that are just starting to purchase more licenses online, and they're either paying online or they're sending checks in. And I said, well, hopefully we'll get to the point where we start to see about 20 or 30 of these a day. Next. Another thing I want to point out, which is interesting, and also shows the potential to expand not only the United States and Canada, but potentially worldwide, is that this is a list of countries where we have clients that are currently utilizing PointMan. And that number is continuing to grow. A lot of that is based on the fact of our relationships with our equipment manufacturers, but a lot of it is just grassroots, where companies are finding us online through Google, contacting us, and it's in all parts of the world. But what we were able to do is take a look at the data and say, where out of these countries do we feel we are realizing the greatest amount of adoption? And interestingly enough, it was Australia. Now we took a look, now we understand why it's Australia. In Australia, they just did a recent study, and they are experiencing $5 billion in damages annually as a result of not knowing where utilities and pipelines are located. Let me put that into perspective. In the United States, it's around 30 billion, and Australia is about a tenth of the size. So they've got a major problem there. In addition to that, they're the first country that has mandated that utilities and pipelines have to be located to what's called subsurface utility engineering quality levels, which is survey grade, 1 to 6 centimeters, which is, of course, exactly what our software is designed for. We have half a dozen clients currently in Australia utilizing PointMan Pro. So we're going to start allocating resources and start doing marketing campaigns throughout Australia beginning in the new year. In fact, I've communicated with the CEO of the 811 over in the United States that manages the entire country. We also just joined NUCLA, which is the National Utility Locating Association, which is members that include construction companies, the engineering surveying firms, and the locating companies. And they're going to help us communicate PointMan to all of their associate members. I think we're going to have a significant increase in adoption in Australia just because of the factors that I mentioned, and we can utilize several of the companies that we already have for reference to provide credibility based on what PointMan is doing for them. Next. So that is it. I'm going to conclude the meeting, but of course, I always like to have some time for some questions. If we go through a few questions, and if for some reason there's a lot more questions, I would invite you to reach out to me directly, or Pat, or Jonathan, or Lewis, depending on what your question is, and we will get back to you in a respectable time frame. So thank you very much. And Marvin, I think you'll have some questions coming in.
Yep, there looks like a few have come in throughout the chat. I'll just start firing away, and whomever wants to answer. First question is a pretty important one. Why did the share price drop so low?
Yeah, I get asked that quite often, and trust me, even though the reason I laughed is everyone always tells me, don't pay attention to the share price, don't look at it. Well, unfortunately, I look at it about 5 or 6 times a day to see where it is. I can only give you my own opinion on that, but there are a couple factors that I think are common themes within this industry and within the market that we're somewhat subjected to as well. So number one, this time of year, if the share price is down, a lot of investors and brokers will sell shares off. It's a sell-off period for end of year for taxes. And everyone's in this industry is aware of that. Now, is that's what happening in ProStar and people are selling off for tax? I don't know, but I'm assuming that that is at least one of the factors. Another factor that I know is that investors and potential investors, they like to see that progress is being made, and they like to be touched once in a while. And unfortunately, we haven't been putting news out. And part of the problem is, as I mentioned, is that we have news, but the way that we were doing it was working with these companies to get authorization to get press releases, which in some cases could take a month or longer, and then only to find out that we hear back from either legal or their marketing team to say that we don't do press releases, particularly with smaller companies. So to avoid that in the future, as I mentioned, and make it corporate policy, and I say that because I don't want anybody taken back. Why aren't we mentioning their name? We're going to start putting press releases out that describes who we sign, and that was a major, without mentioning their names. But I think those two things for sure impact our share price. But the reality of it too is that we have to demonstrate that we can consistently onboard clients and increase our revenue. And I think where the biggest demonstration of that is going to be is at the end of Q1, because that's when almost all of our expenses fall off throughout that quarter. And I'm very optimistic that with the sales pipeline that we have, we're going to significantly increase onboarding new clients, as well as accelerating our sales throughout the major clients that we're working right now that are just testing our product on big projects.
Thank you, Paige. Looks like the next question, will you have to do another round of financing?
Yeah, again, a pretty common question. At this point, no, we do not plan on doing another financing. And with the revenue opportunities that we have in our pipeline, and with the recent reductions that we did in our operational costs, I think that we can avoid having to do another financing. Now, on that note, my honest answer is, if for some reason we had to do another financing and that was our only alternative, well, then we would have to, because obviously the alternative to that is not a good one. But as I mentioned, we will have a much clearer picture at the end of Q1 based on our sales pipeline, the revenue opportunities we have within that sales pipeline, as well as realizing the reduction in our operational costs that we recently did, which will be fully realized in Q1. The other thing I do want to mention is that we are also what I would consider to be approved for what was called the ERC grant. That was the Employee Retention Credit that was given to companies during COVID to retain their employees. And we were approved for the first one, which meant that you were somewhat automatically approved for the second one. We sent all of our paperwork and documentation in, which if it wasn't correct or needed modification, they would have sent it back to us, which they didn't. And from my understanding, companies now are starting to receive payments, and that payment for us is up around $300,000. So obviously it's not imminent because I'm not in control of the government, but I don't see any reason why we won't receive it. That is a significant amount of money for us. And of course, it's non-dilutive. That's money that we're just going to receive from the government. So obviously, I'll keep everybody posted on that. But I just wanted to point that out, that we did qualify for the previous ERC grant. This is the second half of it. We didn't get anything pushed back to us. So I'm expecting that we'll receive that money. And of course, I'd love to see it in the first quarter, but even if we got it in the second quarter, that'd be great.
Thanks, Paige. Next question coming in. Jonathan mentioned your third quarter revenues dropped compared to the last year. Can you explain why?
Yeah, I can elaborate on a little bit. So one of our clients is Kiewit, obviously, and most Kiewit projects can last anywhere to 3 to 5 years. And unfortunately, in Q3, the projects that they would have paid us for were no longer required. Those projects were completed. So although we saw a drop in revenue, we didn't see a drop in customers. It's just that about 2 or 3 of the Kiewit projects had fallen off that would have been paid at some point in the third quarter of this year. Now, the good news is that Kiewit has already committed to 3 new large projects in Q1. And in addition to that, I think I mentioned today is when they're doing their corporate meeting to make a decision on whether or not to adopt PointMan either enterprise-wide or at least push it out through multiple business units in multiple regions. But that specifically is the main reason. There's another reason, it's a smaller one, whereas last year, in the third quarter, CDOT, Colorado Department of Transportation, paid us about $50,000 for what we call a statement of work. It was additional development work we did specifically for their solution, and we had charged them about $50,000, and we received that payment in the third quarter, which is, a one-time payment. That's not part of annual reoccurring revenue. So that is the answer to that question.
All righty. Got lots of questions coming in, so I'm going to jump to the next one here. It says you've been in discussions with several DOTs this year. Do you think you will sign them?
Yeah, as I mentioned, I don't have a crystal ball. These are government agencies. They're very bureaucratic. We've been in discussions with about a half a dozen, includes Arkansas, as I mentioned, Oklahoma, Pennsylvania, Idaho, Iowa, Utah, California. What I always refer to are the ones on deck, are the ones that not only have we had sincere discussions with them, we've probably had multiple visits. They have field tested our product. They've integrated it at some level, I'll call it a pilot, within their workflow processes and business practices. They've written some type of scope, and they have indicated to us that they want to move forward with us, and have also had multiple meetings with Colorado DOT just to see how they've implemented PointMan. And that's where we are with the 2 that I mentioned, which includes Oklahoma and Pennsylvania DOT. In addition to that is also Utah DOT, which has indicated to us all they're waiting for is for us to have seamless integration into Esri, because most of these government agencies use Esri as their primary system of record. They'll collect all the data, manage all the data in PointMan, but ultimately it'll reside in Esri, which is their system of record. And if you remember what Lewis was going through as part of our deliverables for Q1, and I think he even mentioned it was in January, we will complete the API for the integration into Esri, which Utah is aware. Unfortunately, the DOTs, they're government agencies. They move very, very slowly. But what I'm confident about is that if we can onboard say, for example, Oklahoma DOT, it opens the discussions with several more. And if we can get Pennsylvania DOT, it'll open the discussions with several more. But I know in some cases we've been discussing DOTs for quite some time. The good news is that Oklahoma appears to be on deck and ready to sign. And I hope also to sign Pennsylvania. So hopefully those two in 2025, and maybe the potential to sign Utah as well.
Thank you, Paige. Next question, and I'm not sure how many questions we want to take after this, Paige, because we've reached time. Have you considered moving to another exchange like NASDAQ, where you have more exposure and
I'm
credibility?
glad you grabbed that one, Marvin, because that one also comes up quite often. My answer to that is right now, that is not at all what we're focused on. I think in time, that's something that we will consider. Obviously, as a board, what you're referring to is uplisting, maybe to NASDAQ, the New York Stock Exchange, or potentially maybe even just the Toronto Stock Exchange. But right now, and I think it's important to emphasize this, 100% of our focus is maintaining our current operating costs that we just significantly reduced, and then continue to drive revenue, and in particular, start onboarding these marquee clients. Because I mentioned at this point, I mean, it's pretty simple math. If we can keep our operational costs where they are, which are extremely low, and just on a monthly basis, continue to onboard new clients, which provide revenue to us, the more clients we sign, the more revenue we have, and we do that on a monthly basis, we're getting closer and closer and closer to profitability. So our focus is obviously keep our current customers, continue to onboard even the smaller and medium-sized companies. I mean, we're not abandoning them because that's our bread and butter, but also focus on onboarding, at least I would call a 20% of marquee clients in our customer mix, and then focus on those customers so that we can significantly increase our revenue through those major, or what we call marquee clients. And then also we do want to onboard a couple more DOTs, because the DOT pricing is basically significantly higher than what we start these other companies at, right? We've increased our DOT pricing to $350,000 per DOT. So if we can realize just one of those, that's a major impact on our revenue. If we can get two, then obviously that's exponential. But to answer that question is, I think that's something that's ultimately in our roadmap, and it makes sense. But right now, that is just not at all our focus. So Marvin, I appreciate it. That is a lot of questions, and I'm sure there's maybe some more coming in that we can either, get back to, or as I mentioned, people can feel free to reach out, to me or Lewis or Pat directly. But what I would like to end on is just this final note. I mean, this 2025, the year coming up, which is only about 2.5 weeks away, is going to be a pivotal year for us. A lot of time and energy has gone into getting us to where we are today. And it hasn't been easy by any means, and it's certainly taken much longer than we anticipated. But here's the good news. Today, as you can see, I mean, we have developed a world-class product. It's fully developed. There's no more R&D required. We are becoming the recognized leader, and we are realizing increased adoption by some of the largest and most recognized companies in the industry. That says a lot, because these companies are resilient to change, and the fact that they're adopting our solution speaks volumes that we provide something of significant value. And maybe more importantly, it's a signal that this industry is not only on the cusp of a digital transformation, but that it's starting to happen, and we are poised to capitalize on it. Now, the roadmap to achieve profitability, as I mentioned, becomes very straightforward now and well within our reach. With the reductions that we've made in operating costs, increased pricing, and our growing sales pipeline, we just need to continue to sign these new clients month in and month out. Realizing a few of the major clients and DOTs, of course, is going to be icing on the cake. And I'm confident that we are going to sign more marquee clients, and that we could realize a couple DOTs in 2025. That is why, as Pat mentioned, we're excited about what lies ahead for us. And all of this will be very measurable at the end of of Q1, because we have a very mature sales pipeline right now. We have a lot of deals that are getting ready to sign that we've been negotiating with these companies for some time. A lot of them just push it out into the new year. And then, of course, as I mentioned, with all the reductions that we've made in our operational expenses, those will be fully realized throughout Q1. So with no other further ado, I just want to thank everybody for attending and continuing to support ProStar. If I don't speak to you, happy holidays and a very, very good new year. And I hope to hear from all of you in the new year, and things will just continue to plug away on our end. We'll continue just to work hard and persevere. So thank you very much.